great to have you here. Neil, how has it been the last few months? You were in a lockdown, now you're back to work. So you're sort of ahead of the curve from the rest of us. How has it been so far?
Well, I'm in Shanghai. DBS China head office is in Shanghai. But we have branches in 12 other cities. As far as Shanghai concerns, probably same to large part of China. The life is getting back to normal. Parks are open, restaurants, shops are mostly open. So you don't see much difference other than people still wearing masks on the street. One notable thing is, the rush hour traffic, in fact, is much worse than before. So I believe, more people choose to drive to work, for safety. I think because of that, I'm not surprised to see the car sales was jumped in April. So I think after the first quarter down, the car sales in unit sales, in fact, grew almost 1% compared to the same month in 2019. At the DBS China, we still advise our staff to wear masks, advise them to do their best to keep a social distancing. As we know, the pandemic globally is not over yet, and there are still some new cases in other parts of China. So we are taking precaution measures, to make sure our staff and our customers are safe.
Neil, in terms of the overall reality on the ground in China, I keep hearing this 90-60 ratio, that 90% of activity is sort of back online, but because of the weak global demand, things are running only at like 60%, 65% utilization of the capacity. Is that your overall sense, or you think things are a little better than that?
I think by and large that's probably true. However, I think it's slowly improving. We all know that the outbreak happened in China first. So when the government realized how bad that virus was, it took aggressive control measures to contain the spread. As a consequence, the domestic economy got a bigger hit. So the GDP growth rate in the first quarter this year was dropped to negative 6.8% compared to 6% growth in the Q1 in the Q4 last year, right? So that's a bigger drop, considering the size of the China economy, right? So I think the government is taking many measures, whether monetary policy or fiscal policies, to rescue the economy. On the monetary front, we see central bank, cut policy rates multiple times and guided down the market rates. PBOC also, aggressively inject liquidity to the banking system by cutting triple R a couple of times, and released probably, roughly about, several trillion RMB into banks. So, in addition to that, central government speeded up approval for infrastructure projects. I think for the first 4 months, the NDRC, the Planning Commission, approved 60 infrastructure projects worth about 1.5 trillion yuan. So we do expect things will getting better. They also rolled out relief programs, especially for SMEs. We all know SME got hardest hit, compared to large companies in China. So the programs like cutting VAT tax by half for SME, and also waive social security and employment insurance payments for SMEs, etc. So all those things are helping the economy to recover.
One thing we worried about a lot in January, February, when most of China was in lockdown post Chinese New Year holiday, was that there will be a global parts shortage because of the supply chain getting disrupted. Now that companies are back online and we still haven't read any reports of parts shortages, are we past that risk?
As far as domestic supplies are concerned, I think China is very much past that part, however, the supply chain is a global thing, right? So if we talk about a global supply chain, I think it is still not completely recovered yet, So I think that's a complicated part of as far as global supply chains are concerned. We are seeing two trends, of course, in the early stage of the trends. One is for MNCs, I think they are diversifying their global supply chain, But at the same time, for local Chinese industry leaders, they are building supply chains around domestically, as well as around the neighboring countries, So it's interesting to see how the global supply chain will change in the coming years.
Right. Earlier you mentioned that the liquidity conditions have been helped by significant intervention by PBOC in terms of adding liquidity to the system. Has that been sufficient to smooth out credit risk, or you're still seeing credit risks pick up here and there in certain sectors?
Well, I think the picture is rather mixed. For solid companies, the liquidity support really worked well. It helped them to weather through such difficult times. But for other companies, I think they probably had issues or problems even before the outbreak, So some companies, they didn't even want to take the loans from us or from other banks. They simply try to limit their investment, limit their operation capacity.
Sure. Earlier you mentioned that how there's been a surprise pickup in auto sales ever since the lockdown ended. What about the rest of the industry, particularly the property sector? Have people started again lining up for the property sales shows and so on?
Right. Maybe let me address the property sector first. The income gap in China is quite big, right? So on the luxury front, yes, we do see people lining up to invest in properties. But for a large part of China, the recovery of the property market yet to happen. It is more to do with the overall consumption outlook, which depends on employment as well as household income. So my view is the consumption recovery will catch up. I think the auto sales, real estate, also daily needs. As far as the consumption retail consumption is concerned, I think we will see steady recovery. But whether the growth rate of consumption will recover to the level more than before, as I said, it very much depends on the employment, the future outlook of employment as well as household income.
Of course. Now, China is a very tech-savvy society. Everybody has mobile phones, and everybody's doing e-banking, and of course the industries are also at the cutting edge of technology. Now, DBS's big strength is tech. Now, during the lockdown, how did our tech platform held up, and how are you taking advantage of this crisis to sort of consolidate your position in China?
We emphasized on digitalization probably a number of years ago. So even before the outbreak, we started to roll out digital solutions such as APIs, digital onboarding, and digital documents for submission, etc. Those kind of digital tools to our customers. So through the outbreak, we found such digital solutions are really helped the bank and helped our customers as well.
Right. You were talking earlier about how Chinese large conglomerates are building supply chains in China, but also diversifying elsewhere in Asia. So in a way, is this trend going to solidify going forward? And will we see ASEAN coming closer to China through the supply chain?
I would think so. I think we looked at several of our bigger Chinese clients. They are increasingly sourcing domestically. They are also making plans to source in the region, and even consider moving certain part of their business out of China. So I think to face the reality of US-China trade war and a possible global supply chain change, Chinese companies have to address the issues on their fronts. So I think building the increasing trade with ASEAN countries and building supply chain in Asia, including China, I think that's we can see that could be a trend.
Very good. Neil, finally, just a general sense of where you see growth and the overall economic momentum in China going. I mean, do you think the worst is behind us and we're going to get a positive second quarter and then gradually rise up as the year progresses?
Wow, that's $1 million question. Well, I think the recovery is definitely is getting momentum. Okay, it's just the question whether how long will it take China to recover to the level before. I think that very much depends on the global outlook. If the pandemic continue to last, globally, that probably is harder for China to have a quicker recover, to have a positive growth rate in second quarter. But if we say the global pandemic can put it into control within next few months, 1 or 2, 3 months, then I think not only China, the global economy has a better chance to recover. So that's my view. So China is not alone. About 40% of the China GDP is related to external demand. So with that in mind, I think the recovery of China is also a lot to do with how the global outlook will be.
Right. China is not alone. I think we can take that sentiment and statement on multiple different levels. Neil, thank you so much for your insights.